Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mettler-Toledo International Inc. Annual Report. Mettler-Toledo International Inc. offers a diverse range of businesses and services across various industries. At the core of their operations are precision instruments and services that cater to different sectors. The company's laboratory instruments include balances, pipetting solutions, reactors, analytic systems, pH meters, process sensors, and analyzer technologies. These instruments are designed for use in laboratories, research institutions, and testing facilities. Additionally, Mettler-Toledo provides industrial instruments such as weighing terminals, dimensional measurement solutions, vehicle scale systems, metal detection equipment, and X-ray systems. The company also offers retail weighing solutions that include weighing software, AI-driven image recognition, and automated packaging and labeling systems for the meat industry. Furthermore, they provide services to various industries including life science, food manufacturing, chemical companies, transportation, logistics, metals, electronics, and academia. Mettler-Toledo's extensive range of products and services is a testament to their commitment to providing innovative solutions that cater to diverse customer needs. Their global presence, with operations in the Americas, Europe, Asia, and internationally, enables them to serve customers across different regions and industries. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what may cause a stock price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for Mettler-Toledo International Inc.'s stock price remaining unchanged in the past year could be due to a lack of significant news or events that impact the company's performance. This could include stable revenue growth, no major changes in management or leadership, and no significant announcements about new products or services. Another factor contributing to stagnant stock prices is market sentiment. If investors are not optimistic about the company's future prospects, they may be less likely to buy shares, leading to a lack of upward momentum in the stock price. Additionally, if there are no major competitors entering the market or disrupting the industry, it can also contribute to stability in the stock price. In some cases, stagnant stock prices can also be due to external factors such as economic downturns or changes in government regulations that affect the company's operations. However, without access to specific information about Mettler-Toledo International Inc., it is difficult to pinpoint the exact reasons for its stable stock price over the past year. Mettler-Toledo International Inc., market capitalization of $28 billion, is significantly larger than the average industry peer of roughly $1 billion. This shows that Mettler-Toledo International Inc. holds a significant advantage in their industry. Mettler-Toledo International Inc. trades at a higher price-to-earnings ratio of 33 times and a lower price-to-book ratio of -1,184.11 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 104% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for Mettler-Toledo International Inc. can be attributed to several key factors. Firstly, the company's geographic expansion played a significant role in its revenue increase. Sales in Asia/rest of world grew by 14% in 2025 compared to 2023, indicating a strong presence and demand for the company's products in these regions. Another crucial factor contributing to the revenue growth is the overall increase in sales. The company's revenue rose from $3.788 billion in 2023 to $4.026 billion in 2025, demonstrating a steady growth trend over the two-year period. This upward trajectory suggests that Mettler-Toledo International Inc. has been successful in expanding its customer base and increasing market share. While the operating income as a percentage of sales decreased slightly from 22.1% in 2023 to 21.4% in 2025, this decline does not appear to have significantly impacted the company's revenue growth. The significant cash generated from operations, with an increase in cash and cash equivalents from $770 million in 2023 to $845 million in 2025, further supports the notion that Mettler-Toledo International Inc.'s revenue growth is driven by its expanding business and geographic presence rather than solely by cost-cutting measures. Net income for the company experienced a decline due to several factors. One reason was slower growth in sales, which led to decreased revenue and subsequently lower profits. Additionally, investments in new products and software resulted in increased expenses, further reducing net income. The reduced demand in key industries such as pharma/biopharmaceutical, food manufacturing, and chemical, along with decreased capital spending by customers, also contributed to the decline. Currency fluctuations, inflation, and increased tax burden were other significant factors that negatively impacted net income. These external factors resulted in an estimated annual loss of $2.80 minus $3.1 million. Despite these challenges, the company's profit margins were affected by various internal and external factors. Increased foreign exchange rate volatility, potential devaluation and slash or impairment of assets, and difficulty in obtaining materials and supplies all contributed to decreased profit margins. However, the company also identified opportunities for growth through innovation, effective pricing, cost structure optimization, and mix improvement in higher-margin businesses. This strategy led to an increase in segment net sales margins by 14% in 2025 compared to 2024. Despite these efforts, gross profit margins decreased due to increased tariff costs, lower sales volume, and unfavorable business mix. Overall, the company's net income and profit margins were impacted by a combination of internal and external factors, requiring strategic adjustments to mitigate these effects and drive future growth. The company's financial performance is a testament to its ability to generate positive operating cash flow. Over the past 3 years, the company has consistently produced significant amounts of cash from its core operations. In 2025, it generated $955.8 million in operating cash flow, while in 2024 and 2023, it produced $968.3 million and $965.9 million respectively. This steady stream of cash is a clear indication that the company's business model is robust and efficient, allowing it to convert its earnings into actual cash. The consistency of these numbers also suggests that the company has a solid foundation for future growth and profitability. Overall, the company's ability to generate positive operating cash flow is a key strength that bodes well for its long-term prospects. The company's debt level has experienced fluctuations over the past few years. While it increased from $2,152,172 to $2,088,241, this change may not be significant enough to warrant attention. The issuance of $150 million 10-year senior notes in March 2023 and a $1.35 billion credit agreement on May 30, 2024, suggests that the company has taken steps to manage its debt. Regarding interest expenses, there is evidence of a decrease. In 2025, interest expense decreased by $6.1 million, 8% decrease, compared to 2024 and $8.9 million, 11% decrease, compared to 2023. This reduction in interest expenses may be attributed to the fixed obligations associated with 71% of the company's debt. However, it is essential to note that there are varying reports regarding changes in debt level or interest expenses. Some pages indicate no significant changes, while others provide conflicting information. Overall, there is no clear indication that the company's debt level or interest expenses have changed significantly. And if the company's performance varied across different segments and regions in 2025. On the positive side, industrial sales experienced good growth, driven by strong demand for product inspection and core industrial products. The service business also delivered strong results, indicating a high level of customer satisfaction and loyalty. In addition, laboratory sales grew modestly, benefiting from improved bioprocessing market conditions. These areas demonstrate the company's ability to adapt to changing market trends and capitalize on emerging opportunities. However, not all segments performed well. Emerging markets struggled due to intense competition from low-cost providers, which eroded the company's market share. Furthermore, biotech research and academia experienced softer market conditions in 2025, hindering growth in these areas. These challenges highlight the need for the company to reassess its strategies and address the competitive landscape in these regions. Management's outlook on company strategy, according to Mettler-Toledo International Inc.'s annual reports, the company's management is focused on maintaining its position as a leading provider of precision instruments. The financial statements reveal a consistent pattern of revenue growth and profitability, indicating that the company's business model is effective in generating value for shareholders. The notes to the financial statements provide insight into the company's strategic initiatives, including investments in research and development, expansion of product offerings, and strengthening of its global distribution network. These efforts are aimed at driving growth, improving operational efficiency, and enhancing competitiveness in the precision instruments industry. Management's outlook suggests a commitment to innovation and customer satisfaction, with a focus on delivering high-quality products and services that meet evolving market needs. The company's financial performance and strategic initiatives indicate a strong foundation for continued success in the years ahead. There are concerns about inventory buildup or supply chain disruption that could impact businesses. One of the main issues is difficulty in obtaining materials and supplies due to local tariffs and trade barriers, as well as restrictions on investments and foreign ownership. This can lead to inventory buildup and disruptions in supply chains. Another concern is the potential for global conflicts, cybersecurity attacks, and climate-related disruptions that can affect suppliers' ability to fulfill contracts and impact material availability and costs. Additionally, regulations related to sourcing and supply chain, including conflict minerals, may also affect the sourcing, availability, and pricing of materials. The volatility in market conditions in China, increased tariffs and trade restrictions, and export control and economic sanctions, laws affecting transactions, can also cause disruptions to business operations. Furthermore, outsourcing logistics activities to third parties increases the risk of disruptions, and manufacturing delays due to quality issues with alternative materials or regulatory requirements are also a concern. Overall, these concerns highlight the potential risks to businesses from inventory buildup and supply chain disruption, which can have significant financial implications. That concludes the financial summary for Mettler-Toledo International Inc. Feel free to comment below, and I will be happy to answer them when possible.